Hello, my name is Edmond Jamna, and on behalf of DW Consult, I want to welcome you to Tutorials on the Go. Our zeal here is to help transition people with zero, struggling, or shaky base in accounting to an expert position and to a place of confidence. It is also a platform to assist in the smooth studying of the ACCA and ICA professional qualifications, as well as for any tertiary accounting discipline. All that is required of you is to subscribe to our channel and click on the notification bell as well to be part of the program. Tutorials on the Go, bringing accounting to heart. Now, to this episode's lecture. Bank reconciliation statement. There are many errors that can be made in bookkeeping. For example, it is very easy to enter a number incorrectly, and it is therefore important to carry out as many checks as possible to ensure accuracy. One of the most obvious checks is comparing the cash book with the bank statement. The balance on both accounts should be the same. If not, it means there are errors existing, and this check should unearth them. Now, the objective of the bank reconciliation statement is to reconcile the difference between the cash book balance, which is the business's record of the bank account, and the bank statement balance, that is the bank's record of the business's account with them. Now, almost every business operates a bank account where they save all the money and periodically withdraw to cater for operational and other expenditures. The bank account is also used by the business to receive and make payments from and to third parties. Ideally, the content of the cash book at any point should be exactly the same as that of the bank statement, but in practice, differences might exist due to certain factors. Now, note that the reverse of entries in the cash book is seen with the bank statement. So a debit in the cash book signifying an increase in asset will be a credit to the bank statement because it will lead to an increase in the bank's liability to the business, which they will have to pay upon request. So when the balances of the cash book and the bank statement differs, it may be due to the following factors, the first of which is unrecorded items. Now, these are items which arise and recorded in the bank statement, but are not present in the cash book because the business isn't aware of such until they receive the bank statement. Such items may include interest, whether received or paid, bank charges, dishonored checks. The cash book has to be adjusted for such items. The second factor will be timing differences. Now, transactions such as checks are recorded in the cash book immediately they are issued out or they are received, but the bank statement captures it at the date of it being handed, which may be subsequent to the date that the cash book records it in its account. Now, this may be due to the bank's clearing processes or because the payee submitted a check at a later date. Examples of this can be unpresented checks, uncleared lodgements. The bank statement has to be adjusted. The third and last factor will be errors. Business may commit an error or errors in their cash book, for example, debiting instead of crediting, understating, overstating, or failing to record a transaction in the cash book. Now, the cash book balance will need to be adjusted to rectify these as well. The bank, on the other hand, may also make mistakes. Example, they might record a transaction of one business to another business's account. So when that happens, the bank has to rectify such errors. Let's now take a look at some terminologies in bank reconciliation statement. The first of it is a cash book balance. Now, a cash book balance is the business's record of their bank account. The next is a bank statement balance. Now, this is a bank's record of the bank account of the business. Check. Now, this is a document that instructs a bank to pay an amount from an account to a party in whose name the check bears. A drawer. This is also known as a payer. So it is an individual or an entity or a business that writes a check and also whose account the amount will be paid from. Drawee. Now, this is a bank instructed to honor a check or pay out an amount on a check. Payee. This is the beneficiary of a written check or the person or entity whose name the check bears. Unpresented checks, otherwise known as an outstanding check. It is a check written and accounted for by the drawer or the business, but is yet to be paid out by the bank. Hence, it is not captured on the bank statement. Uncredited lodgement. This can also be termed as deposit not yet credited. So these are monies or checks that the business deposits in its account, but the bank is yet to process it and capture it on its bank statement. Now, a check that is rejected or a bank refuses to pay out to a payee is a dishonored check. Now, when there's a movement of money from one bank account to the other, it's known as a credit transfer, otherwise known as a wire transfer. Standing orders or a bank order. So here, an instruction is given to a bank by a drawer to pay a fixed amount on its behalf at regular intervals. Okay, it is usually done to settle utilities such as rent, electricity, salaries, and other fixed expenditures. Direct debit is when a drawer authorizes a payee to instruct a bank to withdraw from the drawer's account and pay to him or her, the payee, a fixed amount periodically. Okay, this is normally seen with regular investment and insurance portfolios. Such negotiations do not include the input of the bank. Let's now look at the preparation of the bank reconciliation statement. Compare the cash book to the bank statement and strike out all items that agree. If there are any items remaining, that will be the differences. So we adjust the cash book to rectify the difference that results from it by putting through the necessary debit or the credit. Now, you should, especially in an examination, write up a T account. Start with the balance given in the question. Then you adjust the necessary differences relating to the cash book. Then you end up with the corrected or the adjusted cash balance. Prepare the bank reconciliation statement at this point. Let's now look at the pro forma for bank reconciliation statement. We start with the balance as per bank statement. Any errors that is committed by the bank, if it was supposed to be added and it did not be added, if it was supposed to be reduced and it did not, it is reduced. Then we add uncredited lodgements. Unpresented checks, if it had been captured, it would have reduced the bank balance for the business. So we bring it here and record it. The balance that will be arrived at should be the same as the adjusted cash book balance. Let's test our understanding. At 31st December 2020, the balance on the cash account was $11,820, which is a debit. But the balance appearing on the bank statement was 15,000 credits. The reasons for the difference were as follows. Bank charges of $20. So this is an unrecorded item. A payment of $1,200 had been entered in a cash account as $2,100, meaning there is an overstatement. A check received for $200 had been dishonored. There were unpresented checks totaling $6,500. Lodgement of $4,000 had not yet appeared on the bank statement. Calculate the correct balance on the cash account and prepare a bank reconciliation statement. We start with the cash book, trying to adjust it to get the correct balance. We start with the opening balance, which is a debit, $11,820. There was a bank charge that was unrecorded. We credit it. Now there was an overpayment. $1,200 was recorded for $2,100. $2,100 was a payment. So it means that the credit was overstated. To reverse it, we have to debit it. Now, a check of $200, the cash book was originally debited with the $200, expecting the bank statement to credit it. But it was dishonored. So we come to the credits and record the $200 there. When we close out the account, there'll be a total of $12,720, leading to a balance of $12,500. This is the adjusted cash book balance. Let's go to the bank reconciliation statement. So for the bank reconciliation statement for the year ended 31st December 2020, as seen in the pro forma, we will start with the balance as per bank statement, which was $15,000. It was a credit, meaning a favorable balance. Then we add uncredited lodgement, which was in the question for $4,000. So with less unpresented check, which was $6,500 in the question, the balance here will be $12,500, which is the same as adjusted cash book. People, will bring our discussion to a closure here. If there's anything that baffled you in our submission, don't hesitate to drop them in our comment section below and it will be addressed accordingly. Whilst at that, hit the subscribe button, hit the notification bell, like, share to your friends. So we'll come away by way of tutorials on the go. Take care of yourself and stay blessed. Poker.